City Union Bank is buzzing in trade today. The bank's asset quality and deposits saw some improvement on a year-on-year basis, while net interest margin contracted. To discuss this and more, we have Mr. N Kamakodi, the MD and CEO at City Union Bank, joining us. Good afternoon, sir. Thank you so much for joining us. It's a good quarter and the street is cheering that. First up, we understand that after a while, albeit on a low base, you've actually seen loan growth on, coming to the double digits. While that is commendable, can you sustain this for the rest of the year? And the second question, sir, is that when you're talking about deposits across the industry, gathering deposits has been a bit of a concern. So where do you see deposit growth trending forward?
Actually, till, let's say, pre-COVID period, we had almost 2 decades run when our growth rate in advances was about a couple of percentage point more than the industry average growth. And there was some pushback during the COVID period, which we are trying to get back now. Last year, we had a certain amount of, let's say, implementation of the digital lending processes and all, which have started yielding some results already. So the year as a whole, there could be some amount of, let's say, fluctuations on the quarterly basis. But year on the, if you look back to our credit growth by December 2022, we had an annual growth rate of the previous year of about 14%, which, let's say, came down because of some changes and all. But now things are in the growth path, and we have touched a double digit for the June. Hopefully, we are trying to push it, let's say, more and more towards the for the end of the current financial year, and we hope we should be in a position to take it forward to the next level.
Okay, so when
and we feel for the go ahead.
Please go ahead, Mr. Kamakodi.
The basically, like, our next target will be to align our growth rate in tune with the growth rate of the industry, is what I mean as the next level. And we hope we should be able to push the deposit growth also to align with that of the credit growth without having any issues. That's what we see, and that is what we are trying to achieve and demonstrate going forward.
So your loan growth will be in the double-digit mark in FY25, Mr. Kamakodi. Can we assume that?
Yes, that is for having that only we are trying to move, and our internal target is to achieve the industry growth rate for the financial year 24-25.
Okay, so Mr. Kamakodi, while you've spoken about advances and you've also spoken about deposits, currently, what is the cost of deposits? Because we understand that there is significant competition in the marketplace for gathering or deposit accretion. And secondly, we've actually seen some NIM contraction that's come about. So going forward, where do you see NIM trending?
Basically, like, you had a major change in the regulation that, like, till 31st March, like, say, whenever there is an overdue for the, like, say, accounts, you can charge a penal interest. But from 1st of April, the penal interest had to go for the penal charges. That's why we had about, like, say, some reduction in the, like, say, interest income. I mean, because of that, the reduction in the net interest margin, which actually moved as the other income per se. The cost of deposits, we had about, it was hovering between 5.7 and 5.75 between the fourth quarter last year and the current quarter. In fact, there was a 3 basis point reduction in the cost of deposits for the first quarter compared to the previous quarter, that is fourth quarter last year. We feel by and large the cost has stabilized, and overall, in terms of both the cost and NIM, they should be around the same level as we move forward, is what we expect at this point of time.
Okay. There is a dip in MSME lending and there's a rise in the gold portfolio. Is there any segmental focus? We've spoken about it earlier as well. And also, how are credit costs across segments? You said it is expected to be stable, but if you can give us a segmental view of this.
Actually, like, if you had, like, say, I had checked the numbers for a year before last, we had about 1,000 crore slippage, which reduced to about 1,000 crore for the financial year 24. About 300 crore reduction was there, and this year we expect a similar trend to continue with the reduced slippages. And overall, for the last 4-5 quarters, the recoveries from the NPAs have stabilized over and above the slippage, which we expect to continue for a few more quarters, is our current expectations. The NPA numbers, the asset quality numbers are very much holding up.
Mr. Kamakodi, last question, we're pressed for time. There have been a couple of statements from RBI. Number one, in terms of the CD ratio, and number two, there have been issues in terms of draft provisioning norms for liquidity coverage ratio. In both of these cases, how will it impact you, and are you comfortable at current levels?
Basically, in fact, this question came during the analyst call also. We expect the LCR for the system itself to stabilize somewhere between 115 to 125 or something like that. Let's say some amount of reorientation of the asset book will happen going forward. But we also think that we should be in a position to, let's say, fully comply with that by minor changes, and we don't expect any major issue. But let's say there were some changes in the calculation of the LCR. Earlier, we had, let's say, declared, let's say, some of us, we had about, let's say, substantially higher at closer to 200 and all, which because of the changed circular and the, let's say, reclassification and change of definition and all of us should be stabilizing somewhere in that 115 to maybe 120 in that range, and we should be comfortable with that. Should not be an issue on.
All right. Okay, Mr. Kamakodi, thank you so much for joining us today and giving us the outlook for the bank going forward and general industry trends as well. It was a pleasure speaking with you. That's City Union Bank, but it's time to slip into a short break. We'll get you more on the markets and stock specific action on the other side. Stay tuned for that.